Money Vocabulary 101. I'm going to break down these seemingly complicated concepts and terms in plain English. Don't feel bad if this sounds confusing to you. It's all intentionally designed to make you feel dumb and make them feel like the experts. But let's simplify it. Quantitative easing. Basically, money printing. That's it. Fiat currency. That is basically the government's monopoly money that they force you to use and that they guarantee that they're going to keep printing more of. Fractional reserve banking. That's when the government gets in bed with the banks and allows them to also print money that doesn't exist. Inflation. That's the result of all this money printing that they're doing. It's an invisible tax that makes everything that you need more expensive and also increases the value of all our assets. Yield curve control. That's another way to just say that they rig the interest rates in their favor so they can keep doing all this money printing and sustain insane levels of debt while you're paying 20% interest on your credit cards. A stimulus check. That's basically vote bribery. It's like printing money right before hyperinflation or giving you candy before a tooth extraction. Bailouts. What happens when your bank account gets to zero? The bank charges you absurd fees when you go into overdraft. But what happens when your bank's bank account gets to zero? The government prints them billions of dollars and gives them loans at 0% interest rate because of yield curve control and fractional reserve banking and quantitative easing. What a scam! Rehypothecation. That's a special type of money magic that only a bank gets to do. When they get printed trillions of dollars from quantitative easing, they get to rehypothecate that and actually make that count as like 10 times the amount of money it actually is. So not only do they get money from nothing, they get to rehypothecate it 10 times over. Negative interest rates. That's an experiment that was tried in the last decade in Europe and Japan. Before everybody freaked out, took their money out of the bank accounts, they were actually getting charged interest to save their money. It's a policy that punishes savers and responsibility. So instead, what we decided to do was just print a whole bunch of money and invisibly tax everybody through inflation. Modern monetary theory, MMT, is often called a solution to all this stuff. But confusingly, it actually advocates for running the economy on wishes, and it's sort of like a way to just make sure that everybody gets everything they need by printing lots of money. So it's basically just doing all this stuff and hoping that there's no negative consequences. So hopefully this helps you out and makes you realize that if one thing's for certain, it's that the money supply is going to keep increasing and the value of your savings is going to keep decreasing. I'm Brad Mills. Follow me for more information on how you can use Bitcoin to protect yourself from the debasement of your savings. And send this to somebody who thinks that inflation is caused by grocery stores and real estate agents.